there are lot of places out there that are the one-stop shop solution, as they say. You know, I call it the one-stop shop problem. I think we've pushed hard as an industry towards a vertically integrated models. You do the finance, you do the buyer's agency, you do the advisory, you do the property management, all that sort of stuff, right? And then you also do the insurance. That sounds really convenient, but when one business earns all the money from every part of your decision, who's actually giving you that independent, unbiased advice? The answer is nobody. Independent specialists like myself, we coordinate the strategy and we beat conflicted generalists every time. And that is because it's in our best interests. It really is. And we're here for you, not the bottom line. That is why I don't tell you what to buy. This one really surprises people because when I speak to them, it's like, oh, you're going to tell me what to buy and you're going to help me find it. I'm like, no, I'm a finance strategist. I'm not a buyer's agent. I don't get paid by developers or anything like that. What I do is I build your finance strategy and help you understand property strategy options. And then I help you build the right team of independent specialists that help you, and they're specialists in their field. They'll talk about their stuff. They don't get involved with what I talk about. You could say I'm your quarterback. I don't play every position. And that really works because we can have robust conversations and you know that you're not just getting yes, yes, yes. It is like, hey, you're going to get challenged because ultimately I don't want you to make $1 million mistake. I'd rather you pay for the advice, which is not $1 million, and get the right advice, be linked up with the right people. And the whole purpose of these people are to help you. I don't get paid by any of my referral partners. They don't pay me. It's an absolute non-negotiable. I do not deal with anyone like that. So to sum this up, the most dangerous advice you'll ever get is the kind that comes without disclosure of who benefits you when you say yes. The 3 things that your strategy needs to answer is 1, what does your end goal, or what's your end goal? And what does your portfolio need to look like to get there? I can tell you most people don't even know how to do this, where to get it, and what does it even look like. Most people just pluck numbers out of the air and say, I just want to achieve that by then, but there's no method to the madness. 2, what can your finance structure support right now? And what needs to change before your next move? This is critical because you can't go buy property without finance. You can't lend money unless you have income, cash or equity, and a good credit file. So doing applications, I never submit applications without an absolute intent. I submit for settlement, not for just approving, and definitely not for getting declined. Absolutely not. 3, who is on your team and are they working together or are they in silos? This is really key because you want everyone communicating and you want everyone working together. So, if you've got a finance strategy and a property strategy, but the person finding you the property hasn't even aligned to it, what are they doing? You're with the wrong person. You need to be with people that align with what you're looking at. If your tax strategy and your finance strategy are not aligned because your accountant's saying, I want to do it this way, but your broker's saying, I want to do it this way, but they actually haven't had a conversation as to why, well, that's a problem because later on down the track, it's going to cause issues. Now, most people can't even answer all 3 of those questions, and that's the gap. with all the right people in play, we were able to get the value at contract of sale price. And the comment from the valuer was, this wouldn't have happened if you didn't know what you were doing. Those were her words. They weren't mine. Which brings me to point 2. The clients who come to me after the damage is done, and I really want to be honest about something. A big portion of the people I work with don't come to me first. And that is okay, because they don't know. They don't know me, right? This is why I'm doing a podcast. People want to know me. If they like me, they like me. If they don't, they don't. They normally come to me after they've bought a property in the wrong structure, after they've hit a serviceability wall at property 2, after their accountants told them, oh, you're paying more tax than you need to for 3 years. One simple conversation right at the beginning of their journey could have avoided them. They could have avoided all that drama, could have saved money, could have built more of their portfolio. It's cost them money. People just didn't invoice you for that cost. You just didn't see it. It was that blind cost. I see plenty of people that are in the rooming house space advising wrong structure. I had a client 2 weeks ago come up to me and go, oh yeah, I've got this. I'm stuck. My broker said, I'm stuck. I can't, my borrowing capacity stuck. My equity, I can't release equity from my rooming house. I'm like, yeah, as soon as I ask more questions, the rooming house is done with a lender the rooming house, 1 was done in personal name. 2 was done with a lender. There's only a couple of lenders that'll do it in their personal name. So 3, they were stuck. They had like $500,000 in equity that they couldn't tap because they had the wrong structure. That's a $500,000 mistake. And you're telling me that you wouldn't pay not even $5,000. I'm not saying I'm $5,000, but you wouldn't pay for the advice from the right people, your accountant, financial planner, and broker. Come on, give me a break. That's what I mean by they didn't get invoiced $500,000, but they just got stung $500,000. The last one I want to talk about is, what are you actually investing in? What myself and my team do is not a transaction. You are not paying for the loan to be written. We implement the finance strategy once you give us the go ahead anyway. You're actually investing in a clear plan that tells you exactly where you are, where you're going, and what needs to happen at each step to get there. Everyone's got their roles to play in due diligence. Mm-hmm. And I guess the other thing that's helped once the contract's signed is the disclosure. Mm-hmm. So you've got basically 3 or 2 sets of eyes. Yep. You've got the physical eyes going over the property and the street, mm-hmm. and you also your overlays and things like that. Then you've got the technical eyes of the solicitor. Yes. If you've got a good solicitor. Yeah. And I really recommend getting a proper solicitor. Yeah, 100%. Look, those conveyancing, little conveyancing groups, they do well. Mm-hmm. But when shit hits the fan.
Exactly. When things get complicated or it's a complex contract, that's when you want, professionals on your team. That's what you're paying for.
Pay for the advice.
Exactly.
Holy crap. This is like a $800,000 to $1 million investment.
Yeah.
What's $1,500, $20,000?
100%. And I always say that I don't recommend going when you're talking about the legal side. So the contract side of your property purchase, that is very important to get right. And I wouldn't recommend going for the cheapest option. Yep.
It's never going for the cheapest. It's just like free is never free.
No, free could cost you a lot of money.
It's going to cost you $1 million.
Yeah, yeah.
Right, potentially.
Well, especially with where property prices are currently, you're spending a lot of money regardless of what you buy. Even if you're buying a unit to, a family home, you're spending a lot of money. So you want to make sure that you're not going to make those mistakes or miss something or, and then it's going to cost you a lot more down the track.
It baffles me. I get it. If you're an investor and you're listening to this, and you think free is free, it is not free. If you want really good, tangible advice that's going to move you forward, get you closer to where you want to be safely, quickly, right? And I guess with no BS, you pay for the advice. You pay for people that are specialists in their roles. That includes your buyer's agent, your solicitor, your build and pest inspector.
Big
Oh
one.
my God. I went with someone because they're $150 cheaper, but looking at the report, your solicitor's picked up, hey, what about these, and these?
We see some absolutely terrible reports. So we saw one the other day. It was a couple of pages. It had only photos, no commentary, and that was it. Like, that was the building and pest report. Like, how does that provide the buyer with any information?
I could open up Microsoft Word, put a couple of photos in there and do it.
Exactly. And people don't know what they're not builders. They don't know what they're looking at.
No.
So,
And this is why you get a good group of people around you, right? Like the contacts. Then, obviously you've got your property manager. Holy moly.
Yeah.
Cheap.
Hard to get a good one.
No, luckily
And
I know some good ones.
Amazing property manager is worth every dollar you spend.
Because they're the ones that keep your investment going and growing and tell you and
They're
your
the
eyes
ones
and
that
ears.
are actually seeing it.
Yeah.
They're the ones that are actually seeing how the tenants are living and looking after the property. And they're the ones that are going to keep you on the front foot with maintenance, with, when you need to increase the rent, when you maybe don't need to increase the rent. Like, things like that are going to be really, really important ongoing.
I think it's having that, again, I've just talked about, basically what's your team even look like?
Yeah.
You're not getting a free team.
No. Yeah.
You're paying somewhere along
And
the line.
everybody in that team is so important for their part of the process.
And that's all they should be doing.
Yes, 100%.
They should be you work on property management, you work on finding the property, I'll work on the finance.
Yeah.
And, even in my industry, like the myth, you can go get free stuff. It's not necessarily going to be free's great. I love free stuff, but I want the right free stuff.
Yeah, exactly.
It's like it's got to be valuable. And a strategy versus a loan, they're two different things.
Yep.
You buy a house without an actual purpose. Have you really done your job?
Yeah. And that's what I say to clients all the time, because obviously in the market we're in right now, people have a lot of questions. And it's no matter what the market is, to be honest, but there's always a question around, like, is now the perfect time to buy? And it's like, are you ready? Are you financially ready? And then 2, do you actually have a strategy and a goal in place for this property purchase? Because those 2 things need to happen before you do anything.
Won't happen. But it's like, as I progress further, the mistakes that I make are more subtle, and I see it the same with my team. They're more subtle, the mistakes that are made, and it's just like a slight misalignment. And I think for me, it's like, that's how I've been able to tell that I'm like, I'm really, operating at a real level of expertise here.
It's a little thing,
it's
not a large
and I'm
thing.
learning every time, and I'm still learning from all those micro subtle mistakes that were so subtle that no one even realized they made it. And it's only from my extremely high expectations and perfectionism that has even caught and realized the fact that there was a mistake made in at all.
It's like, whoops, I didn't realize that. But you don't know what you don't know.
No.
Yeah, until you make it. And I think the best way to learn is to make mistakes.
Yes.
Because the mistake will either cost you time or cost you money.
Yeah.
Or reputation, one of the 3.
Yeah.
Right? But the other thing that we talk about how we collaborate.
Yes.
The reason why we collaborate so well is we're both willing to say no to clients.
Oh yeah. Yeah.
And I don't think there's a lot of yes people.
Yeah.
Yes, I'll buy you that house. Yes, I'll fund you that trust loan that you probably don't need, but because I need it to put on my book, and I'll get you that house because I need to cash flow my business for a month. We're okay saying no.
Oh yeah. I say no to clients all the time. I tell them, okay, this is what the offer needs to be for this property. And we have thought about this. We have really considered what this it's not just some number I come up with. And then clients will think that it's some sort of a negotiation between me. And I had one the other day, $825. And we said, yep, put the offer in at $825. That's what we're going to do. The client comes back, says, I'm willing to put an offer in at $815. And I got back on the phone and I was just like, no, this isn't really how we do things here. It's not that, what you think it's worth. I'm just telling you, like, this is the property we're going for. This is why We've had the discussions with the agent. This is where and that they didn't do it in any sort of a nefarious way. There was nothing untowards about it at all. They just sort of thought that's what you do. And I explained the whole thing and the whole piece. Yeah, I explained the whole piece. And I did very, very, very calmly, respectfully, and was like, just like, oh, hey, we've really thought about this, and $8.25 is the right price to be putting in for because of this, this, and this. If we put it at $8.15, then that's going to trigger with the agent a thing of, we're a bit far off with these guys. And the risk is, do they go to somebody else? Do they look at us and think, I don't know if they're that serious. I don't know if they're there. And when I explain it to the client, they're like, oh, geez, you've really thought about, I'm sorry. Oh, I'm sorry. I'm like, no need to be sorry. But like, really thought about this, and they're like, yeah, let's do it $8.25. And we actually bought it for $8.25.
Yeah, and it's all about giving context and purpose.
Yes.
And it's a strategy. They don't understand what the strategy is. They don't know what they don't know.
No.
And I think, we're both very good at educating people.
Yeah, sure.
To a way we're not making the decision for them. It's like, well, here's the reasons why we're actually doing it our way. 2, step 3, etc. And we're constantly reviewing that every 12 months. For clients on my portfolio blueprint, we normally review every 12 months. Some we're doing 6 months. And some of my bigger clients on my wealth creation plan, we're reviewing every quarter. Now, this then leads on to the reason why their structure and sequencing is off. Mistakes 3 and 4 around key strategy gaps. So one of the big things I've found is people are buying without a number, and they're actually making decisions deal by deal without a roadmap to connect them all. So what I mean by buying without a number is they're just accumulating property without purpose. They're just looking at the raw data, but not looking at, okay, well, bigger picture, where do I want to be? When do I want to get there? And how much do I need to get there? So one of the first questions I ask in a discovery call is, what's the end game? What's the number that you're going to be happy with, and when do you want to achieve it by? So we're trying to extract, okay, well, what's the passive income goal, or what's the income goal you want to achieve, and when do you want to achieve it by? Because that helps you buy the right property and also when to buy the right property as well, because that's the decision. So you're now making a decision based on without that, and then they don't have a roadmap to connect them all together. So they're just buying with zero purpose. So the investor that owns 2 properties and calls it a portfolio, but actually has no idea what 3, 4, and 5 look like, you're literally moving blindly. And the pain point is made concrete because you're not getting any closer. You're probably going to get further away. And we all know in property, it moves so fast that if you have to take a step back in order to take a step forward, you're probably spending 10, 20, 30% more to take that step forward. But for the clients that I have at the beginning, or even like they haven't made too many mistakes, we're getting them moving forward.
On 200 grand of property.
Has he gone to Luke?
I think I did put him onto Luke initially, and I don't know where he's landed now. But
I think I know who you're talking about.
Yeah, I always try and refer
the
everyone
indecisive. There's always one. Eh?
There's always
it's like,
one.
I'm trying to get the best deal. There's no bloody best. Like it's all everyone's giving you the
Now's the best deal. Yeah.
What I find a lot of first home buyers is that they don't even have a chat with someone. Like they just automatically think that they're stuffed. Like the market's too hard.
Definitely.
Like poor me, can't get in. But they won't actually take that step to go and have a chat with a mortgage broker. It doesn't cost them anything. Like get the information that they need. Like we spoke how long before you actually took action? Like it was a fair while before we sort of had things lined up ready to rock and roll.
Yeah. Had a different partner initially, and then things changed, and push forward.
Yep. And we adapted because we looked at, okay, can you buy on your own? That wasn't possible for what you wanted. And then we adapted and had a look at a different strategy, and here we are.
Because it's not only investors that need strategy, right? Like I've just done a podcast recently talking about your first property and how you structure that first property and how you set that all up. Is the foundation of every other property that you buy. And we'll talk about why this is going to be important for you guys, right?
Yeah.
But it's so important. And having someone that like understands, okay, well, what do you actually want to do with it? How can we get you to where you want to be? Not now, but in the future, is so important. I think, Luke Luke hangs around people that talk about investments, so automatically you're going to get that investment talk. He's layering on the skill set. You know, oh, have you thought about this? Ask the extra question. If your broker or bank is just giving you a pre-approval and ticking boxes, you're with the wrong person. The first purchase feels like a goal. You need to start treating your first purchase like the foundation of your portfolio if you are wanting to do that. So the 3 questions every first purchase needs to answer is: 1, does this lending structure support my next purchase? 2, am I with the right lender for where I'm going, not just where I am? 3, does my accountant, broker, and buyer's agent know what each other's doing? If the answer to any of those 3 questions is no, the first purchase may feel like progress, but it's actually the ceiling, or it slows you down. You're doing it without purpose. There's no strategy behind it apart from I need to get in now. And I get it. As a first home buyer trying to get into the market, you're flooded with all these grants. You're flooded with time pressure because you're now competing against every other investor that is trying to compete for the same asset, right? I get it. But a lot of first home buyers don't have the right team behind them either. Now, I don't do a lot of first home buying lending, but the first home buyers that I do deal with want to build property portfolios out. So I will take those clients on board to help build property portfolios out. I've had many. We've just had one of my first clients one of my clients that I did help with their first home. We've manufactured about $400,000 worth of equity just because we bought in the right place. They did a couple of little bits of renovation. We used policy to not lend. Didn't need to lend 80%. We could lend 90% without LMI. May paid a little bit extra rate, but we already had a plan because we knew that if they did a couple of bits of renovations, we would be able to get it revalued in 6 months' time or after the renovation got done, which we did. Went up by 400,000, restructured them out to an 80% loan, released some equity. Now they're going to go buy. They've actually settled on their first investment property because I referred them to Michael from Avid Hawks. He's also been on my podcast. He knew the brief. He knew the strategy. He executed the strategy to perfection, and we executed the finance and got that finance approved in under 24 hours unconditionally, and it was such a smooth process for them, and they're so happy. But we've already set them up for property 3. They already have the plan. They're moving forward with it. They're executing. The next issue you'll have, which what people don't realize, and it's so important, because if you've never done a strategy, this will never come up. It's the lender sequencing problem. Your borrowing capacity with lender A may actually destroy your capacity with lender B down the track. Now, most banks or brokers, well, banks can only do one policy, one type of lending, but some brokers that I've had with some of my clients don't think about this because a lot of them will be very transactional and focusing on the one deal. You think about it because you are building a roadmap across 5 purchases, not just one. That's how we deal with it. I never, ever submit an application without a strategy and knowing exactly where we need to be, what we need to do, which lenders we need to go with. So as an example, one of my clients came to me going, hey, look, I've got a bit of equity. We think we've got some good borrowing power. We want to buy a rooming house and we want to buy another property. Now, if I'd just gone, oh, look, let's just refinance, pull the equity out, go buy this property, then go buy a rooming house, it's a very different outcome, right? It's how we sequence it. We ended up doing the refinance or the debt restructure using debt recycling strategies to reduce their owner-occupied commitment down, which expanded their borrowing capacity. Then we had a war chest of We had about $895,000 to play with because of equity. We're still at 70% LVR against their owner-occupied and reduced their commitment by about $2 and a bit grand per month. Then we sequenced. Your first purchase should not be the standard property. It needs to be the a rooming house. And the reason why we want the rooming house is that we needed to deploy more capital into that to make it cash flow positive. And because we had to lend under a company trust structure in order for it to be, for their accountant to be able to sign off on it going, hey, yep, this is looking after itself. And we already have purchased it for much less than what we modeled in the portfolio. So it means we've got more cash to deploy on the second one. Now they've found their second property. The second property is not going to be bought in a company trust structure. It's actually going to be bought in their personal names because they're one of them has reasonably high income, which, you know, we want to reduce some tax. But by the time we finish this, their loan will be so small against their owner occupied, everything will be tax deductible in their portfolio, because the purpose of the funds are being used for investment purposes. So we found another property. We're going to purchase this property under their personal names. If we did it the reverse, we wouldn't be able to purchase the rooming house property because it's about how we sequence the lending, because you have to then include the personal debt into the rooming house side of things. However, we already know that this rooming house is looking after itself. And now it's under commercial terms as well. Fully rented. It's amazing. So we found this other property. We know that the rooming house is looking after itself. And now we are going to purchase this property, do some small renos. The tenants leave in June. We're going to do the renos and then increase the rent by about $250 a week. So we've manufactured equity and we've manufactured yield in 2 hits. And that's working with Chris and the team at Lucid Property Investments to go find this type of property. And the long-term goal is to put another property out the back, gain manufacturing equity. We can strata it at the end. They've gone from basically one property in their personal, one property in their SMSF to basically 5 properties.
To who they are, what their background is, what their financial stability is, you know, how they're going to cohesively rent that dwelling together and work together. But that's something that we'll be working really hard to try and understand and determine over the next probably month when we really get to know these people now that we've taken over. Yeah. And, you know, it was an interesting exercise taking it over. There was, again, this comes down to like the care factor, you know, we got given the entry condition reports for a brand new rooming house that has never been rented before with furniture, not a single photo. Not a single photo for any of the 5 units, a written report with no photos.
But isn't it a requirement to take a photo on an entry?
I mean, look, if I end up in QCAT for something, for one of these tenancies, which I'll be quite honest with you, we stay away from QCAT and we have a very, very good record of not going, which I know there are agencies going, we're QCAT specialists. That's terrible. Don't advertise yourself like that.
So what's QCAT, sorry?
QCAT is where you go to resolve tenancy matters that you can't resolve between yourselves, like if there's rent arrears outstanding or damages to the property or it's basically like going to tribunal.
But why would you want to ever get to that stage?
You don't. So when there's agencies that advertise going, we're QCAT specialists, I'm like,
what? So you're crap at your job?
Yeah, don't be saying that.
You're basically saying that you don't communicate.
I'm going to add that to my website. Yeah. We have our percentage of the total number of managements that we've gone to QCAT for is 1. It actually is 1, and it was resolved before QCAT anyway. But if we were to go to QCAT for something and they ask for evidence, they want evidence. They want to see evidence, right? Like let's just say the bench top was damaged. They'd be like, what did it look like at the start of the tenancy? Well, I've got a comment that says it was in good condition and the tenant did agree to it, but I literally have no photographic evidence to show you. Like a judge is going to look at that and go, why? Why is there no photographic evidence? You've not actually done any due diligence here as an agency and you're letting your client down. So for us, that in itself was really, really disappointing to see. Like it's a brand new rooming house. We want to try and maintain that property to the best standard that we can for the whole life of that property. So taking photos for an entry report is just basically like basics 101. So again, it came down to care factor, I'm assuming. And yeah, obviously we met all the tenants. There's a few outstanding things that for a brand new rooming house, we've literally resolved it within 3 days. Back to the builders. Hey guys, defects here, here, and here. Can you attend and fix it? Yep, sure. Booked in, done. Entry notice is sent. Getting fixed tomorrow.
And the builders for that, I know the builders that did it.
Yep.
They're actually rooming house specialists
They are,
as well.
and they're
they actually
extremely
know.
good with any of these defects type things. We have a 12-month defect warranty on these things. Let's use it.
Yep. And that property that they bought is cracking. Like it's a
great.
massive block of
Huge
land.
block. Everyone's got a great courtyard, which
Yeah.
is really, really rare because
Yeah.
a lot of times we are
And car
squeezing.
parks.
A car space for each tenant.
Yeah. Like, and enough green space, I feel like
it is
for
actually.
that area
Yeah.
as well. But, price it that way.
Yes,
Like,
correct.
Just because we're
They need to understand what they're getting, right?
Yeah.
Like,
you
need
can go to
really,
Acacia Ridge and go on a shoebox
Yeah.
and not get a car park, leave your car on the street, probably get stolen. No, I shouldn't say that. Probably Acacia Ridge is actually a pretty good area. It's
not too bad, yeah. Yeah,
But
it's come a long way.
you're adding more risk.
Yeah, correct.
So yeah, like it does my head in because it actually, when we were doing that valuation, like I
quite
said to Harry,
frustrating,
I
yeah.
said, mate, you're going to have to prep your clients. Like if this doesn't come in,
Yeah.
I'm not telling my clients to buy a property not worth it. I'm going to be telling them, hey, this is what the valuation came in at.